Hi, my name is Andrew Tong. I'm the Executive Manager at Cobalt Blue Holdings. Cobalt Blue Holdings is developing the Broken Hill Cobalt Project in Australia. We're aiming to be in the top 5 global cobalt producers, ex-Africa. We're aiming to start our project in 2025, so we've got a couple more years to go, but currently we're in the development phase, running a feasibility study.
Andrew, thank you very much. I see we're both wearing the same set of headphones, but yours are a much jazzier colour.
Yes, that's correct, Merlin. My kids picked this gaming headphone for me.
Excellent. Now, I've seen a couple of the Cobalt Blue Holding interviews with Joe and Matt. I haven't seen you on screen before. Could you give a quick background to yourself, to the viewers, and just say kind of what you've been up to and what you're doing now?
Sure. My background is process engineering, or the metallurgy side. I've been with Cobalt Blue since it started in 2017. I came on board to run their scoping study. At the time, it was under a joint venture structure, and I've been with them ever since then. So I've worked through all of the technical side for the company, scoping study, pre-feasibility study, and now currently we're doing the feasibility study. The big ticket item this last year through 2021 has been to build and run successfully our pilot plant. So I've been spending quite a bit of time out at Broken Hill. I live in Sydney, which is where the headquarters for the company is. But over the next couple of years, we're really going to be building our team and transitioning to a workforce out at Broken Hill. Okay,
great. And the chairman's statement and the CEO's presentation came out on Friday. I've had a quick look through that, and the pilot plant has been producing. Remind me, kind of what tonnage rate, and you're just moving now to the demonstration plant, which will be 3,000 tons per annum will aim to produce 3,000 tons of concentrate. Is that or end product? Is that correct?
Yes, Phil, and we had our AGM on Friday. It's always good get together for the 12 months and just reflect on all of our progress. For our pilot plant, this year we've built that. We've treated nearly 90 tonne of ore through that plant. We've produced a number of samples of mixed hydroxide, cobalt with some nickel in the hydroxide form as an intermediate. We've produced some cobalt sulfate. We've dispatched that to a number of parties who've been evaluating that and giving us feedback or commentary around the content of those products. The feed rate for our pilot plant is very similar to next year's proposed demonstration plant, running at 200 kilos an hour of feed material into the plant. But the big difference is that the pilot has really been a testing scenario, so batch operations, and next year we're going to run it as a continuous plant 24/7, looking to start that around February, March, and running that for about 4 or 5 months next year. So pilot plant, 90 tonne of feed, demonstration plant, 3,000 tonne of feed of ore. That'll produce 600 tonne of concentrate, and that concentrate is what will be fed in at 200 kilos an hour through our plant. The big aim that we're trying to do here is obviously confirm that the process flow sheet works for the material. We've successfully done that at pilot, so we're very confident in the flow sheet. But the big ticket item for us is to produce bulk samples that we can then use as a basis for offtake negotiations next year.
Forgive me, I've got a small brain. I need to unpack some of those numbers a bit. So you've been feeding 90. The pilot plant was a 90 tonne batch.
Yes, we did that through the course of the year in about 4 or 5 operations. So a couple of weeks on, a couple of weeks off, a couple of weeks on, a couple of weeks off. Collectively, 90 tonne went through our pilot plant, and now we're going to upgrade that to 3,000 tonne next year.
And so the amount going through the plant, so to do the demonstration plant or the demo plant, you don't need to change the mechanics as such. There are no capital items in terms of kind of expanding throughput or kind of the physical infrastructure doesn't change. It's just they're joining it up together to make it a continuous process. That's the key thing, is it?
There is a small amount of upgrades, but they're all related, as you said, just to joining it up or having the continuity. So some upgrades to some of the control system, some upgrades to some of the feeder hoppers. Those are the sorts of things that we're upgrading so that we can have continuity of operations 24/7.
Okay, and the material that you've mined, this 3,000 tons, is it where's it from, and how your end product is going to be so chemically sensitive. You've got to get the specs exactly right in your end product. How do you select your starter product, from the pit? How do you know that that's representative of what you're going to be putting through the mine later, or taking from the mine?
So we have, in terms of our deposits, we've got a crescent shape to the deposits, and when we go commercially, we're going to have at least 3 open cut pits, possibly 4. In terms of the deposits, we've got 2 main deposits that represent roughly the first 10 years and then the second 10 years for 20 years. And then we've got a small deposit which will feed a little bit into both of those 2 parts of the project. But essentially, almost all the ore for the first 10 years will come from 1 pit, just supplemented a little bit with some from the second pit. The bulk sample, which we're about to extract for our demonstration plant, largely comes from the first pit that will represent the first 10 years of our commercial operation. So we're about to commence that in the coming weeks. We're going to collect that as an underground sample because it's much more cost effective and give us better representativity. We can go along the seam or along the deposit and then collect ore from a few different places and build that. And so we can not completely cover sample representativity, but give it our best effort within the budget and the constraints of the pilot plant or the demonstration plant. So we're going to be collecting material along the deposit, that 3,000 tonne of material.
And have you've obviously got the underground developments already done? Yeah.
We're just commencing the portal and the box cut. They're just starting next week.
Oh wow! But I thought it was going to be an open pit mine. So is this just a specific portal for the bulk sample?
Yes, only just for the bulk sample, because otherwise, to get representative ore in an open cut scenario, we would have had to open up a lot of the area and take material from different parts, and that's just not as cost effective as going straight into the hill and then opening up laterally and being able to take some material out for the bulk sample. So for the bulk sample, we're doing underground, and we can come in at sort of 50 or 60 meters below the surface much more easily, whereas in the open cut, we'd have to come just to the top section of the ore body.
And what's the capex of taking that back? You must have established the cost of taking that sample.
Yes, it's a couple of $1 million.
Okay, and therefore, if you're coming from the top, when you're mining it, what's the weathering profile like of the rock? What's the transition? Does it go straight? How quickly are you into fresh sulfides? And how much of the weathering profile of how much of it? Is there a mixing zone? Is there a weathering profile? How much do you have to strip off?
For our project being very close to Broken Hill, we're 20 kilometres west of Broken Hill. Very stable geologically, very old rocks around that area. Very low weathering. The environment is essentially arid or desert. The rainfall is there's 10 times more evaporation than rainfall per year. So very, very low weathering of the sulfide materials. In fact, we actually have some of the sulfide outcropping at surface. But typically the base of oxidation would be 5 meters, 10 meters. In some areas, it might be a bit more like 15 meters, but essentially it's about a 10 meter base of oxidation profile across the cap of these hills. The hills are around 30 or 40 meters above the prevailing relative land surface. So in those hills, a small cap of oxide and then straight into fresh sulfide. There's essentially no transition. So there's no metamorphized or secondary sulfides. It's pyrite or it's no pyrite. Our main mineral is pyrite. That's what hosts the cobalt. And the pyrite is mixed in with a gang of silica or albite or quartz material. So we're essentially a 2 mineral ore body, the silica gang and pyrite. And once you've removed that oxide cap, you're essentially in large deposit of sulfide material interspersed with the gang material. So very low amounts of overburden to remove, essentially straight into the deposit. In terms of our mining scenario that we're proposing, very large mining blocks, 10 by 10 by 20 or 10 by 10 by 30 for a mining block. We're looking at benches of at least 10 metres or a bit bigger, so very large scale bulk mining methodology.
And what are you mining about 3 million tonnes per annum? And what's the strip ratio?
So our project, we're aiming to have 6 million tonne of ore each year being mined, and over the course of the project, the strip ratio is 3:1. Out of the 6 million tonne of ore, we're then aiming to convert that to 1 million tonne of concentrate, so around about an 80% rejection of material as tailings or waste material, and 20% mass pull. In terms of all the test work that we've done, the gravity spiral work, the float work, at full-size commercial gravity spirals, we've typically had 90 to 95% recovery of pyrite to the concentrate. It's a very high recovery and excellent mass rejection. And so we end up with a pyrite concentrate of about 80 to 85% pyrite in that concentrate, which represents around 90 to 95% recovery of cobalt and pyrite to that concentrate.
Sorry, the reason why I said 3 million tonnes of ore was because I saw in the presentation that you're looking at 20-year mine life, and you've got about 53 million tonnes measured and indicated. So it was 17 years. It was 17 years of mine life, and you've got 53 million tonnes of measured and indicated. And so I divided one by the other, and I came up with 3 million tonnes per annum. But you're going double that rate. So does that mean your mine life is whatever it is, 8.5 years?
No. The mine life is 17. What we're looking at is the difference between the, in terms of the mining reserve versus the mining production target, if I can use that term, production target, in accordance with the JORC code and all those sorts of codes for reporting. Our production target gives us the 20-year or 18-year mine life. So we're closer to 87 million tonnes, I think it is, or 85 million tonnes at that scale. But obviously, the question that you're really getting at is the measured, indicated, and inferred categories for the mineral resource and how they then convert to proven or probable or production target for the mining case. And those are things that we're working through in terms of our feasibility study and trying to bring as much material into the reportable categories, so then it's easier for analysts to do their numbers on us. Okay.
And I I've been thinking about the process so much, I haven't even thought about the geology. What do you call it? Is there a deposit type? Is it just a, apart from a pyrite body, is there a formation process behind it that is recognized in the parlance?
I'm only smiling because you're the geologist and I'm not the geologist here. And so I'll probably give you an answer that I'm sure somebody's going to tell me is not the right answer. But as I understand it, it could be one of those sort of sedimentary deposits. But I'm not the expert in this area. The main comment that I wanted to make is that Broken Hill is very famous for the lead, zinc, silver deposits, known as the Broken Hill sort of mineralogy. We are different, and because we're west, we're the start of the next geological sort of deposit area. And our materials or minerals run west from our place through the New South Wales, South Australian border. And so our geology is different to the Broken Hill line of lode, being that 20, 25 kilometres west. And so we've got this pyrite in our deposit, which hosts cobalt. It hasn't been weathered, so the cobalt hasn't migrated away. If it had more rain there over the last few 100 million years, then all the cobalt would have leached out and it would have disappeared. But because of our arid environment, the pyrite hasn't weathered and it's retained the cobalt.
And it's sedimentary hosted, so it's laterally continuous. I wasn't thinking of going down this line of questioning, but I think your resources are 81 million tonnes, of which 65% are in measured and indicated. But you're actually, if you, and then from within that measured and indicated, you're going to have to define a reserve, which will probably be smaller still. So you're going to have to do quite a lot of exploration to get 6 million tonnes for 17 years in reserve. Is this resource laterally extensive enough for you to be confident that you're going to be able to do that?
We've got just over 125 million tonnes in all of the categories, so MII, so measured, indicated, inferred. But you're right in terms of the measured and indicated. One of the questions that we need to always address as a junior mid company raising money from the stock exchange is how do we best deploy our capital? Should we do a lot of drilling to turn a lot of the mineral resource into a reserve, or do we have a strategic view on that? Our strategy is to have at least the first 5, 6, 7 years as proven category, and then every 5 years we would try to roll that forward in a sense. And so we would do more drilling and bring the next 5 to 7 years in by the time that we sort of start the operation. Otherwise, we would end up overcapitalizing and spending a huge amount of money drilling, but not really getting much further return on that capital. So that gives you a bit of an insight into our thinking around that. I appreciate in terms of the numbers, we could bring all of it into reserve, but it would cost us quite a few $1 million to do that. And I'd rather spend that money on the pilot and demonstration plant and the feasibility study that we're doing at the moment.
Completely agree. I just wasn't aware that you had the extra inferred resource out the side, so to speak. You say that it's either pyrite or it's not pyrite. And you said that I'm just trying to get my head around the process of concentration. So it's clearly, if you're just crushing and screening, the pyrite must be quite coarse grained to liberate, first of all, and then how are you doing the separation? And remind me of the concentration factor again. It was 6 million tonnes of ore going down to, was it 1 million tonne of pyrite?
Around 1 million tonne of ore. They're just sort of average numbers, but it's very close to 6 million tonne of ore going down to 1 million tonne of concentrate. We're going through a crushing process. I'm hesitant to use the word milling, but some people may say milling. We're trying to get our top size down to 1 mil or just over 1 mil as our top size. So we're working through a number of different equipment options to get to that. But really that's a crushing duty rather than a milling duty. We're not talking 100 micron, we're talking 1000 micron, 1 millimeter particle size. At that top size, the P80, so the 80% passing is around 6 to 700 micron, 0.6 to 0.7 of a mil. We find that the pyrite grains, partly because they're so old, partly because of obviously the geology, but the age of it and all of that sort of stuff and the very low weathering, the typical pyrite grain size is around that 600 to 700 micron size, so very large coarse grain pyrite. Obviously there's a distribution there, but that's the core of it. So we're able to work through our process like we did in the previous studies and crush it to that 1 mil, put it over the gravity spirals as you would for the mineral sands process, and have that beautiful separation where pyrite has a specific gravity of close to 5 and the albite silica quartz is closer to 2 or 2.5. And so you get a fantastic stream on your gravity spiral with this golden pyrite in the heavy section, and the lights all move out to the side.
And when I did my very, very elementary entry-level mineral processing course, I was very few facts stuck in my head, but one pointer did was that you typically have to crush down to your average grain size or half your average grain size to get the liberation that you require. But is that
yes.
Does that hold?
Yes.
Does that hold here?
Yes and no. Yes, we obviously have to crush a bit below the typical grain size for the liberation, but what we're finding, and it may be a feature of the fracturing, if I can call it that, as we put it through the crusher, we find obviously sulfides are generally softer than the silicas or the albites and quartz. And so when we are crushing it down to that 1 mil, we find that the sulfides themselves are a little bit finer and more like 400 or 500 micron, whereas the overall bulk is at that 6 to 700, the P80. And so you're correct, but it's hidden in the fact that you've got softer and harder materials as the two binary pieces going in.
Okay, great. And so you can use big equipment and you can just get loads of spirals and you can crush it relatively simply. Do you go down, do you the high pressure grinding rolls, or is it going to be a...
Yeah, we're evaluating HPGR, high pressure grinding rolls. We've been evaluating whether we can use a, inverted commas, modified SAG mill. So the HPGR would be dry, a SAG mill would be wet, but obviously SAG mills are typically paired with a ball mill going all the way down. So to keep that coarseness, we have to do quite a bit of screening work or cycloning work. So that's exactly one of the option studies that we're looking at in our feasibility studies. What's the best scenario of equipment for the crushing or the milling duty? I'm hesitant to use that word, but to get it down to that particle size.
Great. And then once you've got your clean pyrite con, then you go into all the fancy stuff, the chemistry kit. So just on that resource, you said that when the new resource update uses a 275 ppm cobalt equivalent cutoff. Is that because how does that work? Is that a kind of a gradation of the pyrite distribution, or is it what are the boundaries of the deposit like, or is it internal waste?
You've covered a few different aspects there for the mining. I'll start with the first one, is that when we approach the deposit, if you think of coming in from the two sides, left and right, top or bottom, whichever way, if you're coming in from this side, effectively you've got 0 cobalt, 10 ppm cobalt, 20 ppm cobalt, and then immediately when you're in the sulfide, it's 200, 300 ppm. That's the boundary margins of it. And over the last 3 or 4 years, we've been optimizing our flow sheet and so on, and the mining studies. At 270 cutoff ppm or 300 equivalent ppm, that's essentially taking all of the mineralized sulfide deposit. Yeah. Once you move 2 or 3 meters out, there's just the pyrite's gone. It's so low, you're down at 20, 30 ppm. So we're effectively taking as much of the material as we can. Internal dilution is very, very low, because once you're out of that oxide zone and you're into the sulfide, then it's consistent all the way across to the other side, left to right, north to south, east to west. It's just one big mass. I was on another meeting and somebody sort of described it as a little bit like one of a coal deposit. You either have coal or you don't. In this case, you have the sulfide or you don't. We're not worried about internal grades or dilution or ranges. It hosts the sulfide, it hosts the pyrite. Take it, put it in the plant, make the concentrate.
Fantastic, thank you. Much clearer now. And is there cobalt grade variation within the pyrite seam? And I understand now why you're calling it reef seam.
No. So the mineralization is that we have pyrite mineral. There's some cobalt substituted for the iron in that actual crystal lattice at a very small percentage. So pyrite, FeS2, 1 atom of iron, 2 atoms of sulfur. What we find in that crystal structure is that a little bit of cobalt has substituted for some of the iron. And so the cobalt content of that lattice is exceedingly consistent through the whole deposit. The only thing that varies is the quantity, how many grains of pyrite per cubic meter or BCM. How many grains of pyrite do you have? Because every grain of pyrite has the same quantity of cobalt.
Oh, interesting. So it was syngenetic. It was as the pyrite was forming, there was cobalt in the solution, and it just right across. It's that consistent, and it's the nickel consistent, and the so the nickel's the only other kind of value metal in there, isn't it?
Yes. So our ratio roughly is 6 or 7 cobalt to 1 nickel. So it's 6 or 7 times more cobalt than nickel. If we just jump in terms of the numbers, we're aiming to produce 3,500 tonne of cobalt a year as various chemicals and so on, but 3,500 tonne of cobalt content. The nickel is only going to be 500 tonne of nickel.
Yeah.
So pretty much a 7-to-1 ratio.
Yeah.
Within the overall global deposit, there are small sections where there might be a little bit of zinc or a little bit of copper or a little bit of manganese, but there's so little now, and it's been interesting this year as we've done our pilot plant. We actually have never run those trace metal removal circuits because we just didn't have the quantities that we thought before our last drilling program. We just thought that there might have been more of those trace metals, and as we've developed our resource, we've now completed a sort of a major resource update recently, and the trace metals just aren't there in quantities at all.
And when you're speaking to customers, people who are buying the mixed hydroxide product or the sulfate at the end, they're going to be really, really sensitive to any impurities, aren't they? I mean, whether it's copper or zinc or chlorine or fluorine, yes, or whatever.
Yeah, the cobalt sulfate is the most sensitive because that's the material that goes directly into the battery precursor chain. So they would buy cobalt sulfate, mix it with nickel sulfate, manganese sulfate, lithium, and so on. So that one is very, very high purity cobalt sulfate. The intermediate, the mixed hydroxide, the tolerance on the trace metals is 0.5% or 1%. So you can easily sell a hydroxide with 1% zinc or 1% manganese. Now we're below that, but I'm just giving you sort of the typical specs of what the market is acceptable on that.
And are you aiming to provide products, cobalt sulfate, to a variety of different customers, or are you? I listened to the last interview with Matt, and Joe was talking about kind of half a gigafactory. Does that mean that you're aiming? Are your conversations about providing half a gigafactory worth of cobalt to one partner, or are you talking to having the possibility of having to produce cobalt sulfate for 5 or 6 different customers, or a number of customers?
Look, I'll give you the answer at this point in time, which is that we're happy to entertain whoever comes to us and we can negotiate offtake agreements with. But a more serious answer is that we're currently in a process at the moment where we're evaluating opportunities for project partners to come into our project at the project level. And as part of that, obviously offtake is a big discussion point. And so I can really give you a better answer probably this time next year. But at this stage, certainly we're talking through a number of options there. The advantage of a single supply is that then we could marry the needs and the capabilities for the trace metals, because every plant, as you can appreciate, every EV manufacturer or the battery guys behind that have their own chemistries. And so some are a little bit more tolerable to higher levels of, say, calcium, some are lower levels of, say, sodium, and so on. So we could really tailor that if we had a single offtake. If you have multi-offtakes at this point in time, across the world, there's no agreed specification. So yeah, there's a lot of discussion around that.
In the con series that I've been doing for Crux, one of the things I talk about is the specific contract requirements of specialty metals, which are not traded on a terminal exchange, and this is a perfect case of that, which gives you a competitive advantage if you can produce the right thing, but also is quite tricky because you've got to exactly match your offtake requirement. How quickly or how sensitive is the process? I mean, when you're sitting in your Wizard of Oz booth with your levers and things, how easy is it to tinker with the output, or is that going to be apparent? Is that going to be more apparent during the course of the demonstration plant as to how sensitive the process is tailoring the back end product?
I'll answer that, but I'll just give you 10 seconds of introduction to get to my answer. As I was saying before, where we have this massive sulfide deposit, and when we go through the concentrate process, we make a concentrate essentially with a fixed cobalt, irrespective of what was fed in through the front door. So my point here is that we have our first leveler for variation. So once we've dug it all out, and then maybe there are variations in the ground, so that comes out, goes through the concentrate circuit, we get a very consistent concentrate at roughly 0.5% cobalt. That's our concentrate. Once that then goes through the plant, the first stage of our plant is a kiln where we're taking the pyrite and we convert the pyrite to pyrrhotite. So we're evolving some of the sulfur that comes off and is collected and turned into sulfur prill. So we make a pyrrhotite. That pyrrhotite is then prepared before we go to the leach circuit through a magnetic separator, because pyrrhotite is magnetic and gangue material is non-magnetic. So what we feed to the leach circuit is reasonably clean pyrrhotite. Yes, it's been prepared through the kiln, but it has less of these gangue material, silicas and so on. So by the time we've gone through that, that's our second great leveler for variability. So I've had two big ones, one's a concentrate, one's then the kiln operation. Then we feed it through the leach circuit. Our next leveler is the fact that we make the mixed hydroxide. All of our cobalt will go through that mixed hydroxide stage. And that's where we recover the nickel into that too. And if there's trace amounts of copper and zinc, we can keep those out, or we can put them in the MHP. But essentially the MHP is our third leveler. Then we get to the answer to your question. We can sell MHP or we can make cobalt sulfate. Our overall capital costs at the moment, around 10% of our capital estimates is tied up with that MHP to cobalt sulfate refinery. We can turn that on, we can turn it off, we can sell MHP, we can make cobalt sulfate. So it's only at that very small end. We're now talking 10,000 tons of mixed hydroxide going into a plant, the mixed hydroxide being 30-35% cobalt, going into a plant to refine into cobalt sulfate. The cobalt sulfate is just under 21% cobalt. So you go from 10,000 tons of MHP to just short of 17,000 tons of cobalt sulfate because of the grade variation. And so now you're at a very small chemical refinery, very clean, I'll say high tech, but very clean chemical refinery. You're not at a minerals processing plant, which is all that front end to make the MHP. So that gives us great advantages, and yes, we can tailor it. But what I'm stressing here is that that's at a very small scale. It's easy to do that. It's just a few ton a day of material being processed. It's easy to tweak that versus the whole mining and the minerals processing side.
Thank you. It's a very accessible mineral processing flow sheet that you've talked me through.
Yes.
Which, when I looked at very briefly looked at the financial models or the kind of the outputs from the Cobalt Blue is putting out, the IRR is quite low. So it's an after-tax IRR of, 19%, I think. And that indicates that this is a kind of a tight margin business which can run for a long period of time, and that's fine. I understand that. But in your test work of this year, you've done 4 kind of major batches. Has there been variability in terms of recovery and cost? And if so, kind of, can you explain some of the complexity or the variability around that?
Sure. So I'll just take you back a little bit to your comments around IRR. The numbers are right, not 19% post-tax. Our challenge is effectively to raise the capital and get into business. Our all-in sustaining cash cost for the cobalt sits around $12 US per pound of cobalt, which on our understanding is in the bottom quartile of cost production profiles. So they're a little bit meaningless given that almost all cobalt is a byproduct. So a cost profile for that's very difficult to evaluate depending on copper price or nickel price. But effectively, we're in the very bottom quartile for production. Very high margin in terms of today's cobalt price is sitting around 25, 26, 27 US dollars per pound. So high margin, but it's the capital burden to get us into production. So turning to your question, in terms of the operating side, obviously in terms of the pilot, nothing has been optimized, but so far we haven't seen anything to change our view around the overall metal recoveries. in terms of our total project, from in the ground to product, we're roughly 85% recovery of cobalt, with the major loss of cobalt being through the concentrating circuit due to either poorly liberated material or agglomerates or things like that. But essentially, that's half our losses are through there. 5, 6, 7% of total cobalt is lost in the concentrate circuit. The rest of the losses are an accumulation of soluble losses or deportment of cobalt to some of the residues and so on. We haven't really seen any change from that in terms of our pilot work. In terms of the costs, our major cost input is for the processing plant is the power. Nearly 20% of our costs are power related, and we haven't seen anything that's going to change our power consumption. But pleasingly, because we're in Broken Hill, we can source all of our power from the national energy grid, and with greater uptake of renewables, greater stability in that network through the east coast of Australia, the forward projections for the grid price are substantially lower today than they were 2 years ago or 5 years ago, and they're projected to drop even more by the time we come into production. So we're very pleased to say that, yes, our OPEX is going to be different when we're running, but hopefully, particularly on the power side, that's out of our hands, but it's trending down. The other inputs to our process being chemicals, we're very low on chemical requirements. That's inherent to the chemistry set or the technology that we've chosen. We're heavy on power, but low on chemicals. So there's less variability on that side.
Thank you. And lucky you having your energy costs predicted to fall. It might be offset by the diesel used for the trucks, though, as that's getting more and more expensive. But
that is, I've already mentioned one of our option studies in the feasibility study. You've just touched on probably one of our biggest option studies is trying to work out where in the revolution of electrification for mine vehicles, where do we sit? Are we going to be a bit too early, or are we just in time to take advantage of that? But that's certainly a very big area that we're trying to focus on at the moment, is thinking through our mine fleet. And as you could appreciate, if you electrify your mine fleet, generally you'll go to slightly smaller trucks. That has the added benefit of smaller ramp widths, so less out of ore development. And we've been doing some option studies around what would that look like, adding another truck or another 2 trucks, but cutting your ramp widths. Those are the sorts of scenarios that we're going to be running next year.
Good stuff. Well, I think that pretty much covers, we've pretty much covers the questions that I had in my mind for the kind of the technical process. So in a sense, what the key next steps for the company will be sorting out the demo plant, getting that into steady state. And then you've got this ongoing process, which started, I think, in April last year of looking for partners and a partner to source the capital or to kind of co-fund the construction. Are those the kind of the key news elements, the drivers for the company in the medium terms, the demo plant and the capital solution or the customer tie-ups?
Yes, so we really have 4 big things that we're working on. You've mentioned some of those already. So one is the demonstration plant, bulk sample demonstration plant. That's our big sort of ticket item with the majority of our staff working on that over the next 6, 9, 10 months or something. It's meant to finish around the middle of next year. So that's the cornerstone for our overall feasibility study. So number 1 is our demonstration plant. Number 2 is completing our feasibility study. We're aiming to do that towards the end of 2022, start of 23. We're just working through our tender process at the moment for our feasibility study engineering team, so the third-party engineers. We'll be announcing that soon, but there's a group of those that we're working through at the moment. We've commenced the environmental impact study, on-ground study, so the actual site-specific hydrogeology and surface waters and flora and fauna and heritage and cultural studies, those sorts of things. So we're progressing that. That's looking to go to the regulatory bodies towards the end of next year as an EIS submission, and then that'll take a number of months to go through the approvals process. So those are some of the study things that we're doing. Out of that will come material for offtake negotiations or discussions. And in conjunction with that, then that also feeds the project partner and the overall sort of project financing package. We're going to be looking to do the financial investment decision, so FID, in first half of 2023. I'm not going to be too specific. I'm sure it's going to change a bit, but around that time. But we realise that it takes a long time to build the networks and the relationships for the credit, for the equity, for the offtake. All of those things takes a long time to put in place because you need all of them to be comfortable with one another, the due diligence to be completed. So we started that early in some respects, but we're just in that building relationship stage and trying to work out which groups are interested and then bring those closer and closer over the next 18 to 24 months.
Andrew, thank you so much. I've got a much clearer idea now of what your company is about and what the plans are for the next 12 to 18 months. I think let's leave it there for now. Perhaps we can get you back on once the demo plant is up and running, maybe in kind of 3 or 4 months, or 4 or 5 months. Thank you very much for your time. Enjoy your evening, what's left of it, and I'll crack on with my morning down this end.
Yeah, thank you so much, Merlin. My pleasure to join you today and look forward to catching up again in the new year.